Good afternoon, Quasar Markets Live. How are we doing this afternoon? You have your host, Howard Hondo Greenberg. Here we are going to do the Crypto Corner every Friday. I take a look at the crypto and blockchain markets, cover everything from price action to what's going on the regulatory fronts and just in general, blockchain technology. Today we have a few things to go over. We're going to take a look at the news, what's going on there. And then my focus today is going to be a little bit on Bitcoin's price action. I went over it last week. It's followed through right about where I said, I'm still bullish as long as we close above $53,000, then we stay bullish. That bullish flag still in place. We've been trying to get above 60K here. This morning, if you were watching on Quasar Markets Live, I did say that would be the spot that I would sell off into a little pressure today. I did do that. I will look to pick some back if we go down. I do still have a little bag if we go up from here, but I did sell into this pressure a little bit. I've been doing that on a repetitive basis here for the last few months. We'll look through it on the price action in a second. On that, we're also going to go over the Bitcoin mining stocks, what's sort of going on in there. Seeing some bullish indicators that are coming out of that area where we're seeing some more hash rate come online. We're seeing them spend money. They don't do that unless they have a strong conviction that the price is going to move in the right direction. Also, with that being said, though, I will point out that we did see a little bit of Bitcoin miners selling today when we broke through 58. So we did see a little bit. We know they have to pay their bills. What's been a very strong indicator we're going to talk about later is that the Bitcoin miners, especially led by Mara, again, have been spending most or have been holding most of the Bitcoin that they've mined. So let's get right into it. First thing that we'll do is take a look at Bitcoin's price action so far. And you can see that here on the daily chart, we broke up to 59,997. Like I said, I had put 60K as the spot that I would start to look for a reversal here. That came into play. Let me pull up the daily chart a little bit. As those of you that were here last week know, my feeling or view that I had been looking at was that we had formed a pretty nice little, bullish flag in Bitcoin. And I felt that as long as we stayed there, that, above that 53K, that we were still in play. So if we take a look here, I'll draw back out a little bit what I was talking about. And we had been watching here. Bitcoin in general had been sitting in this fairly nice bullish flag I had mentioned when we got hit here the other day. And we were testing 53 again. As long as we closed above 53, I wasn't scared. That was at this point basically last Friday that we discussed that, I believe. Yeah, last Friday, right at that time. So, we have recovered nicely from there. We've moved up. A few things that I'll point out on the daily chart. Let me get rid of that bullish flag for a second. Was also, if you're into Fibonacci's, if you trace back from where at the end of July here, we dropped down, what you see is we've had it stick pretty much to those levels, right? We dropped down all the way here to that 50K, a little below 50K, back on the 4th and 5th of August. We got a nice initial first wave retracement back up to about the 0.618 level. Tried to get across it, weren't able to stay across it, dropped back down, fell right back down to that 0.382 level. And then on the second retest on the fib, came back up to 786, dropped all the way down and found support at the 226. And right now we're sitting right about the 0.5. So that's why for me this is a little bit of a test here. I don't know that we don't reverse back down, or do we start to try to make a higher high. And what would keep me in a very bullish mood, or would turn me to what I would say ultra bullish, would be any testing of the one level, getting back up towards that 70,000, of course, would be bullish. I don't think that we have the impotence there right now yet to do that. I think you're going to see us somewhere in a range between that 53 and that's 63. So 53 to 63 is where I see us playing out, but that's what we've got sort of going on here when it comes to Bitcoin on the daily charts. Okay, well, let's talk a little bit about what we've seen in the news. Probably the biggest one everyone's talking about today is that MicroStrategy and Michael Saylor have purchased an additional 18,300 Bitcoin for about 1.1 billion. That means they're holding almost a quarter of, or excuse me, almost 250 million Bitcoin, 250,000 Bitcoin at this point. I'm sorry. Yeah, almost holding a quarter of a million Bitcoin. So again, Michael Saylor not scared at all. I had some talk today, some people talking about the fact that they feel that he is going to try to create like a Bitcoin bank. I almost see him playing out. I know this sounds crazy, but he's following sort of the barons of the past, the railroad barons, the oil barons of older years, the Rockefellers, you know, the J.P. Morgans, and Carnegies and so forth. And that, to me, he's trying to corner the market on Bitcoin. He wants to hold as much as he possibly can. So, you know, I do think that is a little bit there. Going a little bit to the other side of the crypto world would be that DJT and Donald Trump's family there is getting set to launch their World Liberty Finance Project on September 16th. I am in no way pushing that project or supporting it. It has a bunch of red flags, so to speak, on it from some issues with developers that were past part of some protocols that got hacked previously. I also tend to be a person that doesn't think that every single thing you want to do in the world of crypto or blockchain needs to have its own coin. And to me, when you look at that project, it doesn't pass that need. You know, there's no reason it couldn't use a stable coin like USDC or Tether or be tied to the price of Ethereum or Bitcoin to do what they're trying to do in this world of DeFi. And that's, in fact, you know, one of the things that I'm seeing more of, both at a investor level, where you see VC investment is sort of not out there in the alts world of crypto. What they are investing in is a lot of real world use case for blockchain technology that uses the rails of existing crypto. So you might see some things that are getting built on top of Bitcoin second layer, on top of Ethereum second layer. We're seeing a lot going on with Coinbase's, you know, Base, which is a scaling solution, a secondary layer 2 on top of Ethereum. We're seeing a lot of these intersections, a lot of money is still being raised, but it's not being raised to launch tokens. It's being raised to use blockchain technology to settle things faster for identity, you know, sovereign identity, and for many uses like that. So love to see that. And that has definitely been the case. That's, you know, been a way that this has been moving for a while. When we get into other big news recently that I think is important, Grayscale came out and announced that they are starting a new crypto investment trust fund for Ripple XRP. So that is good to see. Now, I will actually start off, this is not an ETF. They are doing an open-ended trust, that will be similar to what the original GBTC was, and similar to what they have in place with their digital app, large cap fund, and other funds that they have in place that aren't ETFs. But number one, this shows the trust in Ripple having gotten by most of its legal woes with the SEC. So that Grayscale feels comfortable enough now that you can produce this and allow U.S. accredited investors to get involved. So that I thought was positive. We did see Ripple yesterday take a nice move up, and it has been moving up again today on most of the metrics, right about 57. We do know that Ripple, though, has had a lot of trouble staying above 60. You can see here back in July, it would bounce above for about a day, but it wasn't really able to hold above 60 for more than a day or two without losing momentum. So that's really the battle spot that I'd be looking at if I'm looking at Ripple. There would be that 60 spot. I will tell you, I am a Ripple holder, have been for a long time, especially playing into. I bought it, back years ago, but also when the SEC suit was announced and Ripple really dropped down tremendously, I was a big buyer at that point. I have sold some of it off, but I'm holding a decent amount. So in transparency there, I do want to tell you that. Outside of that news, other things that I thought were important today or over the last couple of days has been we're seeing a lot of regulatory talk in the UK. So we have seen where they are looking to declare Bitcoin and crypto as a personal property. They introduced what was called the Property and Digital Assets Bill, and they want to officially and legally recognize Bitcoin and other cryptocurrency and digital assets as personal property. So with this new legislation, British law would officially protect digital holdings as Bitcoin and other things. And what it does is it provides some more recourse in legal cases, quite honestly. That's important. The UK government, further explained that with this new legislation, their legal sector would be better equipped to respond to these new technologies and attract more business and investment to the UK. So the UK has been trying to move ahead. We saw last year the ECB and the EU really work with MiCA, which is the markets and crypto assets that really set the framework for digital assets within Europe. We're now seeing it in the UK. We really hope to see that in the US. We're still not there yet. An election year makes it even harder in the US, to be honest with you. We do got a lot going on right now. One of the things that was just brought up in the Senate was that, in the House, was that John Rose, who is a House member from Tennessee, has put a bill together that would create a joint committee providing advice to agencies and allowing them to work better between the CFTC and the SEC. It's called Bridging Regulation and Innovation for Digital, Global, and Electronic Digital Assets Act. The bill would create a joint committee that would provide, as I said, advice to agencies. It would allow for harmonization of laws. It would examine and disseminate methods for describing, measuring, and quantifying digital assets. So again, we're seeing the right steps forward. The committee would be made up of at least 20 non-governmental members representing the digital asset industry, along with digital asset users and academics. The agencies would have a single rep each. Agencies would be required to respond publicly to committee's recommendations. It would be a really good intersection of the public and private sector. We had a lot of these things in place that were working prior to COVID, but during that time, a lot of them fell off, and we haven't seen a lot of this connections. I was working personally on one with ATARC that was working on using blockchain to secure voting that we wrote a white paper on. Went well, but a lot of those have gone away, so it's good to see this combination of private and public hopefully working together. I am proud to say that ABCA, the American Blockchain and Cryptocurrency Association, of which I am the president and one of the co-founders, is going to hopefully be involved in this process. So that's why I bring it to your attention. We do have a few other things going on here too. Last week we had a bunch of Republican lawmakers go after Gary Gensler for a political hiring. He hired a new director of trading and markets. I'm not going to try to say his first name. His last name is Dr. Zhu. And that they, in a Freedom of Information Act, they were able to find out that in an email to, Gensler, that he had made it clear that he was of the correct political spectrum to push forth Gensler's, ideologically. And that's against the rules. It's a big no-no, in fact, especially, my co-founder at ABCA was a, part of the U.S. Treasury as a civil servant, one of the highest ranking civil servants within the Treasury at the time. And, that's what it is. It's non-political. They have to stay out of that, and they do. It's very important. So this is a big deal. There's been a lot of pushback against Gensler. I don't see him making it through to the next president, even if it's Kamala, and it sort of stays. I see his days as being numbered. The hawks are sort of gathering around him, you can see. So that is interesting. I did see also that eToro, who was another one that had been sued by the SEC for listing, cryptos, and basically eToro agreed on Thursday to settle charges with the SEC that it operated an unregistered broker and clearing agency, and that it facilitated trading in some crypto assets that are securities. eToro paid a 1.5 million, or is going to pay a 1.5 million dollar fine, and they are going down to only selling 3 digital assets: Bitcoin, Bitcoin Cash, and Ethereum. So again, it tends to be those 3 are the 3 that it's widely accepted, even by the most stringent of looks, as the 3 that pass the Howey test. And that's not me, but the test that people use to tell if it's security is Bitcoin, because Bitcoin Cash is a derivative of Bitcoin, or a fork thereof, same thing. And then Ethereum, as we know, which is still hotly contested because there never really has been an official state there, except for the fact that the Ethereum ETF went through, which leads means it isn't a security. But they haven't come out and said it as such. So that was good news for eToro. Not too bad. They'll be able to move forward now, and they're keeping it there. On the other sort of bad news in crypto, or a reoccurring one, if you were watching this morning, I mentioned to Stephen how China can only ban crypto so many times, because it seems like every time we go on a bull run, that sort of tends to be the news that tries to knock us down. Is they'll all report how China is banning crypto again for the 800th time. So the other one is another consumer research group came out and said that they think that Tether is not transparent enough. I don't argue with this. Tether has been on that tightrope line of, are they being transparent enough or are they not? They basically have on different times done allowed some audits to happen, but back in 2017, Tether had promised, at the request of the SEC and the state of New York, that they would conduct full audits on a regular basis. And then they released a report, not too far after that, 2018 time frame, by a law firm that, said it was fully backed by U.S. dollars. But the DOJ and SEC weren't happy with that because it was an accounting firm. And they weren't able to actually find, an accounting firm that was considered to be trustworthy, let's say, because they did use a crypto-based accounting firm, which has come under a lot of scrutiny, to do an attestation report, and basically, no one will listen to that anymore. So they've come back out and said that, now we're 7 years later, and we still don't really have a full independent audit of their resources. So, it's never a good sign. For me, like I said, I think that Tether has done enough to prove to most of the people in the markets, most of the participants, and I can tell you participants that do it in a big way at OTC, over-the-counter trading desks, that aren't worried about the things. And when we saw FTX's implosion, and the Luna Terra debacle, and there were huge outflows, Tether had no problem with redemptions whatsoever. And, quite honestly, have proven to be a very profitable company. So what I am happy to see, so don't like that news that came out yesterday. What I like is what they're doing here is Tether does, like I said, now maybe they will take that next step, because they've gone out and hired Jesse Spiro. If anyone knows Jesse Spiro, has a really good reputation within the blockchain and government areas. He previously handled government interactions for chain analysis in an on-chain, data analytical company that worked closely with the U.S. government to track some of these hacks, to do a lot of on-chain research. and has had good standings with, the different regulators within the U.S. And abroad, and also was the chief of government affairs for PayPal. And when PayPal added crypto to it, he was the person that was sort of leading that. So now that that Tether has hired Jesse to head its own shop, as the issue has long been under a cloud of reported U.S. investigations, Tether does play a significant role in the current future development of the digital economy and the U.S. dollar hegemony. Spiro said, who also ran the government affairs at blockchain analytic firm Chainalysis. The ever-evolving legislation and regulatory landscape will continue to require strong collaboration between the public and private sectors. So, I think getting Jesse on board there, hopefully we can get this into a place where it is more transparent, where it does mimic what we see with Circle and USDC and Paxos and their stable coins and a bunch of others. And the reason that I say that is that stable coins really, have taken a turn in what they're used for and how they are used. And there was just a really good report that had been commissioned by Brevin Howard and Castle Island Hill that looked at 2,500 crypto users in countries that don't have the banking infrastructure that we have and have other issues with hyperinflation and such. So Brazil, Nigeria, Turkey, Indonesia, and then parts of India that are underserved. And what they're talked about is that stable coins are more and more increasingly being used every day for everyday finances and savings and paying their everyday bills. Not so much for the, the speculative investing that we used to see. So that's why it's so important that these stable coins are, backed properly, that they can be trusted, because what we know is that there's hyperinflation in a lot of these countries, and there's no access to US dollars, or there's very limited access to US dollars. So these stable coins have a real use case in these countries to help, them safeguard. If I can stop, inflation by hedging my bet by holding USDC or USDT in Brazil, Argentina, Nigeria, places that have up to triple-digit inflation, then it's a very powerful tool. So, again, happy to see them moving in the right direction, because I think that stable coins are something we don't look at enough and realize how important they really are to the industry. Some other news that I thought was important here was talking about investment. I did see that Parify Capital is partnered with Securitize. Securitize is definitely at the forefront of real-world asset tokenization. And when I say that is, I'm actually going to pull it up and put it on my screen from their website. Securitize does a lot when it comes to tokenizing funds for existing companies already. And they have about 950 million on chain in real world assets for companies like BlackRock, like KKR, and these others. And when I say that, what do I mean? They are the ones that have tokenized already for BlackRock their PIDL. So you can buy into a BlackRock private fund the same way that you would buy into their other hedge funds in a digital manner using BUIDL, which is, as you can see, a private fund. You need to invest $5 million, and it gives you the information here. And here are all the ones they've done here. And it's not only ones for private, accredited members. They have the ARCA U.S. Treasury Fund. I spoke about this a few weeks ago. What's interesting here is maybe you're looking to say, how do I get into, I want to buy some T-bills. I don't know how to do it. I've never done that. What do I do? You're able to actually buy them directly through ARCA here. So they do have some here, and they are continuously adding to their offering. So it's good to see And that's what I was saying when I said earlier that we are still seeing a lot of investment within the crypto space, within the blockchain space, but that is being done in these type of areas. We're seeing a lot of stuff there. So, just wanted to point that out. Get that off there. Man, 59,580. We're struggling here to stay above 59,750 today. As I said, I think that 60,000 is a tough spot for us. We will go a little bit more into pricing here in a few minutes. Just a couple of more things to get into in the world of blockchain. Outside of that, another thing I thought was interesting I was reading about is when we talk about the use of blockchain technology in a way that, again, isn't strictly crypto. Northern Trust is introducing a digital carbon credit trading platform. So the financial service company Northern Trust is launching an institutional carbon credit ecosystem on its Northern Trust Matrix Zenith digital asset platform. So they will act as the custodian and record, transfer, and settle digital carbon credit trades against emission footprints on the voluntary carbon market. So again, people looking to buy carbon credits, blockchain and the tokenization of that has been a huge market that we're seeing, and Northern Trust is one of the leaders in that space. So interesting what they're building out there. Let's talk a little bit about the ETF world and what's been going on there. I will say I was looking at this site here, So Value, that I like a lot, and what they've got going on, and what we see here is ETFs now $17 billion in net inflows as of yesterday, close of business. Yesterday we saw about 39 million in inflows, and you can see here, who's our leaders. We talked about it. BlackRock with their IBIT #1, over almost $21 billion in net inflow yesterday, and they're at almost $21 billion. $21 billion of net assets. You've got GBTC, who's at about 12.97 billion. You've got Fidelity's, who's at 10.09. I did notice too that for those that don't know, Coinbase Prime Trust is doing the custody for most of the ETFs. In fact, for all of them not named Fidelity, Fidelity is self-custodying. And what we've now seen is finally that BitGo, who had sort of been left out of the game, which was surprising because BitGo was, one of the hugest players when it comes to that, institutional custodians. They finally have been added to 21 shares, and 21 shares will be using Anchorage Digital, BitGo, and Coinbase. So it is good to see BitGo finally get into the game there. It was interesting. I thought it was funny. 21 shares said that they're using multiples because, of course, they want to have multiple, no single point of failure and all this other stuff. But, if, let's face it, if they have a single point of failure in one of two or one of three, it'd still be devastating enough to, do it. And then, let's get into what we are seeing going on in Bitcoin. The prices, what was I looking at? What am I seeing in on-chain metrics this week? And so forth. So let's start to get right into it here. As I move my piece of paper. So as we know, Bitcoin had been making a move up here towards $60,000. Bring the charts up again. Like I said, looking nice and bullish. Daily chart, if we start off there, looking pretty good. One thing I'll point out that has me also somewhat bullish on Bitcoin is I'm also noticing a little bit of a bullish divergence across Bitcoin's lows. So as we can see, we're seeing lower lows here, right? Across the board, just going back to the end of June. But what we've seen is the lows on RSI are actually moving up. So that's usually a bullish divergence, you know, and what it could say is if we can break this top trend line of that same period, right about there, that we could see a run up, you know, so that would put us somewhere in this point in that 63 range, you know. So that's what we're looking at. You know, we have that bullish flag, the bullish divergence. Those things are looking good. Like I said, I also was looking at the Fibonacci levels. We've retraced 3/4 of the way up there. I think we do get a full retrace. We talked a little bit last week, you know, where we're still seeing some pressure and why we keep seeing pressure and why I think we'll see pressure at 60 and 63. I keep mentioning those two key numbers probably a lot. Is 60 is a psychological, and 63 is where the short-term holder is sort of sitting. So right now, if we look back about over the last 3 months, you know, a Bitcoin, if you bought in the last 3 months as an average, you're holding at about $63,082, which is still, you know, keeps you underwater. And about 75% of those short-term holders in the last 3 months are underwater. So what tends to happen in those times is we tend to see a choppy ride up, because what happens is we get a lot of sell pressure into this upward moves. And you can see that we've had that on the daily chart, right? We've had some pretty big swings. You know, we moved up from a low of about 53.7 up to 58.226, came back down to 55.5. You know, so it hasn't been one straight shot up. We've seen these dips, and that leads me to believe that we're seeing those short-term stocks starting to sell out. So, you know, it's a little bit of a concern until we can break through that 63.082. That's where you could really see a jump if that was to happen. So, you know, that's what's going on chain that I'm seeing. We're still seeing the cohorts of whales picking up more and more Bitcoin as the short-term holders drop. I was looking here, as you know, I look at the derivative data a lot. Was looking at open interest. Open interest in general is starting to pick up again this week. So it does lead us at a little bit more risk of a downward liquidation. What's nice is the opposite has happened, and we've been moving up because we've been getting a little bit of a short squeeze out of the liquidations on Bitcoin. So let me pull those up for you so I can see what I'm talking about. And you can see as we look through here, the majority of the last 24 hours, it has been liquidations of red, which means liquidations of short positions. We can see it even more. If we come here and we look, yesterday there was 40 million or 40.5 million of liquidations to the short positions in the derivative side and only 5 on longs. And you can see that for the last 3 days, as we've made this move up, that's been the case. The 9th was the last day that we had more long liquidations than shorts. But we always get back into a little bit of a risk there when you run into higher open interest. So we'll keep our eyes on that. As we said, right now we've got about 31 billion in open interest. I start to get a little bit more nervous as we break that 40, as we approach that 40. As we approach 40 is where we really have seen the liquidations come in. So if we approach, and again, this is on volume of open interest on the derivative markets. So if we look to, I'm trying to think of anything else here really caught my eye. Not really anything else off of the derivative that I'm seeing here right now. Nothing too crazy there. So that's what we're seeing. You know, I think that we are in a good spot with Bitcoin right now. I think that we are still seeing that movement. Over what I am more bullish about is I'm hearing some good talk out of the Bitcoin mining companies. We are seeing a lot of them come back from their Chapter 11 filings, like Core Scientific, which was one of the biggest players, and they're coming back. And what we're seeing is that the performance of Bitcoin-focused miners, when they do move up, it tends to boost the investor confidence in Bitcoin's long-term value. So it tends to be a leading indicator. And we're starting to see that. And if you look at the Bitcoin miners here across the board, you can see how over the last week or two, Mara starting to move back up. Riot starting to move back up, right? TerraWolf. Bit Digital, it's across the board. Hive, Hut, all of them. So the host sector is moving up together. Again, part of that is a lot of ETFs that have to do with Bitcoin miners. Van Eck has one, so you do have to keep that in mind. But we're seeing them all move in the right direction. So that's what we want to see. I will mention too that we're seeing market caps really move up. If we look at you start with TerraWolf. And you look at their market cap now and where they're at, their price at 1.64 billion. It's up about 182% from this time last year. Same thing, Bit Digital. Market cap of 424, up 131%. So you're seeing a lot of increase in market cap. Same thing, Bitfarms, Riot, Mara, all up. CleanSpark. CleanSpark's up 26%. You got Mara up 53%, Riot up 71%, and Bitfarms up 89%. So, that's definitely important to take a look at. MicroStrategy we know is moving up nicely there. What I'll also point out is even as we're seeing this, we're still really early in adoption. When it comes to looking at like ETFs and the top, ETFs out there, there's still a good portion of them that do not have any, Bitcoin in there, any Bitcoin ETFs. 15 of the top 25 do have exposure, led by Citadel, which owns about 812 Bitcoin in there. So you got a lot of them that have it. So, but with that being said, that's 10 that still don't. So it still gives you a lot of room for movement there, a lot of ability for it to go up, and I think we're in a good spot. I mentioned CleanSpark, and they've agreed to purchase 7 new crypto mining facilities in the Knoxville, Tennessee area, and that's going to boost their hash rate by 22%. So that's what I mean. You're seeing companies acquire hash rate. We're seeing hash rates at almost all-time highs, and those things are what are important when it comes to the profitability of Bitcoin miners. And for a Bitcoin miner, to be profitable, it then leads to profitability across the board. So that's this week's look at the crypto markets. For Quasar Markets, I am your host, Howard Greenberg. Have a fantastic